Over 90% of financial transactions in the UK are now digital, and that means nearly everything you do with your money can be tracked, analysed, and flagged. But here's the unsettling part. New laws are quietly expanding who gets access to that information and how it can be used against you. Imagine waking up one morning and finding your bank account suddenly restricted or frozen, not because you did something wrong, but because a system flagged your behaviour as unusual. No warning, no explanation. Just your money out of reach. So the real question is, how safe is your money anymore? And more importantly, what are these new UK laws actually allowing behind the scenes? Stay with me, because what you're about to hear might completely change how you think about your finances. Number 10. Financial behaviour profiling. Imagine if your bank didn't just store your money, but actually tried to understand you as a person. That's exactly what's happening with new systems designed for financial behaviour profiling. Using advanced AI and data analytics, institutions can now study your spending habits, your routines, even the timing of your purchases to build a detailed picture of your financial personality. Research in behavioural finance shows that patterns in spending can predict risk. So if your behaviour suddenly changes, maybe you spend more than usual, send money abroad, or make unusual purchases, it can trigger alerts automatically. The system doesn't see context, it just sees patterns. And sometimes that's enough to flag you. Picture this: your daily coffee, your online subscriptions, your monthly bills, all quietly forming a digital fingerprint. Over time, this fingerprint becomes your financial identity. And while this helps detect fraud faster, it also means you are being constantly analysed, often without realising it. So what can you do? Start by keeping your financial behaviour consistent and transparent. Avoid sudden, unexplained changes when possible, and always document large or unusual transactions. The goal isn't to live in fear, but to stay aware and in control in a system that's becoming smarter every day. We put a lot of effort into breaking this down for you. So if this opened your eyes, drop a comment saying "I'm aware," so we know you're paying attention. And don't forget to subscribe. It's just one click, but it helps us keep bringing you content that actually matters. Number 9. International money transfer controls. Sending money across borders used to be simple, just a few clicks, and it was done. But now, new UK regulations are placing tighter controls on international transfers, and the impact is bigger than most people realise. Governments are increasing oversight to prevent illegal money flows, tax evasion, and financial crimes. But this also means more scrutiny on everyday users. Recent policy updates show that even moderate transfers can trigger additional checks. Banks and financial institutions may now require more detailed information about who you're sending money to, why you're sending it, and how often you do it. In some cases, transactions can be delayed or even blocked until verification is complete. Imagine trying to send urgent money to family or for a business payment, and only to face unexpected delays, questioning, or restrictions. It's not just about security anymore, it's about control and visibility. Every international transaction is becoming part of a larger system that monitors the movement of money globally. So how do you stay safe? Always use trusted and regulated transfer services, double-check recipient details, and be prepared to provide documentation if needed. Keeping your transactions clear and well documented can help avoid unnecessary complications. The key takeaway: cross-border money is no longer just about speed, it's about compliance, transparency, and awareness. The more you understand the system, the less likely you are to be caught off guard. If this made you rethink how you send money, comment "Global Control" below. We read every single one. And take 1 second to subscribe. It's free, but it helps us keep uncovering what others don't tell you. Number 8. Online payment tracking. Every time you shop online, pay for a subscription, or even order food, you're leaving behind more than just a receipt. You're creating a data trail. New UK regulations are pushing digital platforms and payment providers to share more transaction data than ever before, all in the name of preventing fraud and improving financial security. Studies in e-commerce and fraud detection show that tracking user behaviour helps identify suspicious activity faster. But here's the catch. This doesn't just apply to criminals. It applies to everyone. Your everyday purchases, from late-night shopping to random impulse buys, are being analysed to detect patterns and risks. Think about it. Your favourite apps, online stores, and payment services are now part of a wider network that can connect your spending habits across multiple platforms. What you buy, how often you buy it, and even how much you spend can be monitored more closely than ever before. So what can you do to stay in control? Start by reviewing your privacy settings on apps and websites. Avoid linking too many accounts together, and use secure, trusted payment methods. Being mindful of where and how you spend online can reduce unnecessary exposure. The reality is, convenience comes with a trade-off. The digital world makes life easier, but it also makes your financial behaviour more visible and trackable. Awareness is your best defence in a system designed to watch closely. If this made you think twice about your online spending, comment "I see the pattern." Let's see how many are truly aware. And don't forget to subscribe. One click from you helps us continue exposing what's happening behind the scenes. Number 7. Tax transparency. Expansion, paying taxes, has always been part of the system. But now, the level of transparency around your income and spending is reaching a whole new level. New UK regulations are expanding how much financial data is shared between banks, employers, and tax authorities, making it easier than ever for them to see the full picture of your finances. Research shows that increasing transparency helps governments improve tax compliance and reduce hidden income. But for everyday people, this means there's less room for error. Even small inconsistencies, like undeclared side income, freelance payments, or irregular earnings, can now be picked up much faster through automated systems. Imagine every source of your income being automatically connected and cross-checked. Your salary, online earnings, investments, or even small digital payments, all feeding into a system designed to spot gaps. It's efficient, but it also means you need to be more accurate and organised than ever before. So how can you stay on the safe side? Start by keeping detailed records of all your income streams, no matter how small. Use simple accounting tools or apps to track your finances and make sure everything is properly reported. Being proactive today can save you from serious issues later. The bottom line? The system is becoming smarter, faster, and more connected. And in this new reality, staying transparent isn't just recommended, it's essential. If this opened your eyes, comment "full picture" so we know you're staying one step ahead. And please take a second to subscribe. It's just one click, but it supports the effort we put into bringing you real, valuable insights. Number 6. Digital currency, CBDC development. What if the money in your wallet was no longer physical or even fully controlled by you? The UK is actively exploring a central bank digital currency, CBDC, often referred to as a digital pound. On the surface, it promises faster payments, lower costs, and greater efficiency. But underneath, it introduces a completely new way your money could be managed, tracked, and even controlled. Economic research highlights that CBDCs can improve financial systems by making transactions instant and transparent. But there's another side to this innovation, something called programmable money. This means, in theory, money could come with rules attached. For example, where it can be spent, how quickly it must be used, or even limits on certain types of purchases. Imagine receiving money that expires if not used, or funds that can only be spent on approved categories. It sounds futuristic, but these are real discussions happening in financial policy circles. While the goal is to improve efficiency and prevent misuse, it also raises serious questions about financial freedom and privacy. So what should you do? Stay informed as these developments unfold. Understand how digital currencies work and think about how they might affect your daily life. Being aware today means you won't be caught off guard tomorrow. The future of money is changing, and whether it empowers you or restricts you may depend on how well you understand the system. If this made you question the future of money, comment digital control below. We're reading every thought. And don't forget to subscribe. It's one simple click that helps us keep uncovering what really matters. Number 5. Reporting threshold changes. Most people assume that only large, suspicious transactions get flagged, but that's no longer the case. New UK regulations are lowering the thresholds for what counts as reportable activity, meaning even smaller, everyday transactions can now attract attention if they seem unusual. Financial crime research shows that illegal activities are often broken into smaller amounts to avoid detection, a tactic known as structuring. In response, authorities have adjusted systems to detect patterns, not just big numbers. So instead of looking for one large transfer, they now monitor multiple smaller ones over time. Imagine sending money in chunks, maybe helping family, paying for services, or moving funds between accounts. Individually, each transaction looks harmless, but when viewed together, they can form a pattern that triggers automated alerts. And once flagged, your activity may be reviewed more closely, sometimes without your knowledge. This doesn't mean you've done anything wrong. It just means the system is designed to be more sensitive and proactive than ever before. The challenge is, it doesn't always understand context, only patterns. So what can you do? Be mindful of how you move your money. Avoid unnecessarily splitting transactions to bypass limits, and always ensure your activity has a clear and legitimate purpose. Keeping simple records can also help if questions ever arise. In today's system, it's not just about how much you move, it's about how you move it. If this surprised you, comment "Patterns matter" so we know you're paying attention. And take a moment to subscribe. It's just one click. But it helps us continue creating content that truly informs you. Number 4. Frozen accounts. Without warning, imagine opening your banking app and seeing a message you never expected. Your account has been temporarily frozen. No prior notice. No clear explanation. Just a sudden halt to your access. Under new UK financial enforcement frameworks, this is becoming more common, as authorities and banks are given expanded powers to act quickly on suspected financial risks. These actions are often based on preventive measures, meaning they don't always require proven wrongdoing, just a pattern or activity that appears unusual. Research in financial crime prevention shows that early intervention can stop illegal activity faster. But for everyday users, this creates a situation where your money could be restricted based on algorithmic suspicion, not confirmed facts. Picture this. Your rent is due, bills are pending, and suddenly you can't access your funds. Even if the issue gets resolved later, the disruption can be stressful and inconvenient. And in many cases, resolving it may involve providing documents, answering questions, and waiting for reviews. So how do you protect yourself? Start by keeping your financial activity clear and well documented. Avoid sudden, unexplained large transactions, and make sure your account information is always up to date. If you're expecting unusual activity, like receiving a large sum, inform your bank in advance when possible. The key here isn't fear, it's preparedness. In a system that prioritizes speed and prevention, staying organized and transparent can make all the difference. If this made you think that could happen to me, comment "Stay ready" below. We want to hear from you. And don't forget to subscribe. One simple click helps us keep bringing you content that actually protects you. Number 3. Crypto regulations. Tightening cryptocurrency was once seen as a space of total freedom and anonymity, but that's rapidly changing. New UK regulations are tightening control over crypto transactions, exchanges, and even individual users. The goal is to reduce fraud, money laundering, and financial instability, but it also means crypto is becoming far more regulated and transparent than before. Recent studies in financial systems show that unregulated digital assets can pose risks to the broader economy. As a result, authorities are now requiring exchanges to follow strict identity verification, KYC rules, track transactions, and report suspicious activity, just like traditional banks. In simple terms, crypto is no longer invisible. Imagine buying or transferring crypto and knowing that every move could be monitored, recorded, and analysed. Even wallets and transactions that once felt private are now being linked to real identities through advanced tracking tools. For many users, this completely changes the way they view digital currencies. So how do you stay safe in this evolving space? First, always use trusted and regulated platforms. Avoid unknown apps or exchanges that promise unrealistic returns. Second, keep a clear record of your transactions, especially for tax purposes. And finally, stay updated because crypto laws are evolving faster than most people realize. The truth is, crypto isn't disappearing, but it is transforming. And in this new phase, knowledge and caution are your strongest assets. If this changed how you see crypto, comment "no more hiding" below. We're curious what you think. And don't forget to subscribe. It's just one click. Yeah, but it helps us keep breaking down complex topics for you. Number 2. Cash usage restrictions. Cash has always felt like freedom. No tracking, no digital trail, just simple private transactions. But that freedom is slowly being reduced. Across the UK, there's a clear shift toward a cashless society where physical money is used less and digital payments dominate almost every aspect of daily life. Studies show that digital payments help reduce tax evasion and financial crime, which is why governments are encouraging this transition. But here's the reality. When cash disappears, every transaction becomes visible, traceable, and recordable. From buying groceries to paying a friend, everything leaves behind a digital footprint. Imagine a world where even the smallest purchase is tracked, where your spending habits can be analysed in real time. No more anonymous payments, no more quiet exchanges. While this may improve efficiency and security, it also raises concerns about privacy and personal control over your money. So what can you do in this changing landscape? It's wise to maintain a small amount of emergency cash for situations where digital systems fail or access is restricted. At the same time, be mindful of how often you rely entirely on digital payments. Balance is key. The truth is, cash isn't disappearing overnight, but it is slowly fading. And as it does, the way you interact with money is becoming more transparent and controlled than ever before. If you still believe cash gives you control, comment "Keep Cash Alive" below. We want to hear your view. And don't forget to subscribe. It's just one click, but it helps us continue sharing what truly matters. Number 1. Increased bank monitoring powers. At the centre of all these changes is one powerful shift. Banks now have expanded authority to monitor your financial activity more closely than ever before. This isn't just about large transactions anymore. It's about everything: how you spend, where you send money, and even how often you move it. Modern financial systems are built on advanced data analytics and risk detection models. Research shows that by analysing patterns in real time, banks can identify suspicious behaviour faster and prevent fraud. But here's the reality. These systems don't just watch criminals, they watch everyone. Imagine your daily spending being quietly analysed in the background. A sudden large purchase, an unusual transfer, or even a change in your routine could trigger alerts. And once flagged, your account activity may be reviewed, questioned, or even temporarily restricted, all without you knowing immediately. This level of monitoring creates a system where your financial life becomes increasingly transparent and observable. While the goal is security, it also means less privacy and more oversight. The line between protection and control is becoming thinner. So what can you do? Stay consistent with your financial habits, avoid unexplained irregular activity, and always keep records of important transactions. Awareness is your strongest defense in a system that's always watching, because in today's world, it's not just about having money, it's about how your money is being seen and interpreted. If this made you realize how closely things are being watched, comment eyes open below. We genuinely want to hear from you. And please subscribe. It's just one click, but it means a lot for the effort we put into bringing you this content. So, after looking at all 10 new laws and changes, one thing becomes very clear. Your money is no longer just something you own. It's something that is constantly being observed, analysed, and managed within a much larger system. From increased bank monitoring to AI-driven profiling, from cash restrictions to the rise of digital currencies, the financial world is shifting toward more control, transparency, and automation. And while these changes are often introduced in the name of security and efficiency, they also come with real implications for your privacy and financial freedom. But here's the important part. This is not about fear, it's about awareness. Because the people who understand these systems are the ones who can adapt, stay protected, and stay in control. Simple habits, like keeping clear records, avoiding unusual transaction patterns, using trusted platforms, and staying informed, can make a huge difference in how smoothly you navigate this new financial landscape. Take a moment and ask yourself, are you fully aware of how your money is being tracked? Are you prepared if something suddenly changes? The truth is, the system is evolving whether we like it or not, but that doesn't mean you're powerless. It just means you need to be more conscious, more prepared, and more informed than ever before. Because in the end, it's not just about protecting your money, it's about protecting your control over it. Stay aware, stay prepared, and most importantly, stay one step ahead.